going on, everyone? It's Swift here from Boom Trading. Welcome to our Boom Trading YouTube channel. And today I have for you my 85% win rate TT3 entry model. So I know a lot of people have been waiting on this video. So without further ado, let's get right into it. So what is TT3? TT3 is a fractal and mechanical entry model based on an outside bar. So we actually developed this entry model around the teachings of the strat by Rob Smith, the creator of the strat. Rest in peace, Rob. He passed away about 2 years ago, but we have learned so much from Rob that we're insanely grateful for all we've learned from him. So we actually started with the strat and options, and we kind of built on that from the ground up, right? So the strat is our complete foundation of how we see the market, how we view it. If you want to check out the strat, feel free. You can search it up on YouTube. A lot of great people in this space teach it, but if you really want to learn, I'd say go to the creator, Rob Smith. He also has a YouTube channel, and check out the strat. So TT3 works on any time frame because it's a fractal entry model, right? So you'll find it on any time frame. It works on any chart, and it's used to scalp or swing trade to take profits out of this market. So this is probably one of the easiest ways to take profits out this market with precision and tight stops. So most people are very familiar with outside bars or engulfing bars, whatever you want to call them. But around here, we're going to call them outside bars or 3 bars, as we like to call them with the strat. So real quick, for anybody who's unfamiliar with an outside bars are simply candles that take out the previous candle's low and high, right? So as you see here, we have the previous candle. A bullish outside bar will always run the previous candle's low first, and then will run the previous candle's high second. A bearish outside bar simply runs the previous candle's high first, and then we're going to run the previous candle's low second. So bullish outside bar, bearish outside bar, very simple stuff here. So again, outside bars or 3 bars, right? As we like to call them with the strat. So outside bars are candles that take out the previous candle's high and low. Outside bars are also swing points on lower time frames. So a bullish outside bar takes the low first and then the high of the previous candle. A bearish outside bar takes the high first and then the low of the previous candle. So how do we actually enter with this model, and what do we need? So all you need to enter with this model is simply narrative and price in an outside bar, okay? So create minor narratives in price, as in, where are we in price? Are we at the highs? Are we at the lows? Are we just coming into New York? Are we in London? Are we in the middle of the range, right? So create minor narratives to figure out what price is doing, and then you use this entry model to get involved in the market. So all we do is we find our outside bar, right? If we're a bullish setup, we need a bullish outside bar. We wait for price to trade above our outside bar. We wait for price to come back into 50%. And then when we're at 50%, we're looking for limit entries or market orders on buy stops back out to always take what? Our first target is always going to be the swing high that brought us into our outside bar. So one more time, all we need is the outside bar. We're going to wait for price to trade above our outside bar. We're going to wait for price to come back into at least 50%. We're going to take entries around 50%, targeting the swing high that brought us into our entry, right? So this is a bullish setup, bullish outside bar. Right here, we have a bearish outside bar, bearish setup, okay? So a bearish setup is the same exact thing. All we're waiting for is price to trade below our outside bar. We're waiting price to come into a discount of 50%. We're taking it short here with a stop above our outside bar for a bearish setup. And we're taking profits simply at the swing high or low that brought us into our entry. So when you are trading this model, and when you get these trades above our outside bar to actually activate our entry model, following the rules, you can use wicks or bodies, but bodies will always be the most high probable. So when you're trading above these outside bars or below these outside bars, you will see wicks above, and you will see them come back into 50% of the outside bar, and you will see them launching immediately out. And that's okay. We use wicks. We utilize wicks above. That doesn't matter to us. We utilize wicks or bodies, but I'm telling you all, the bodies will always be the most high probable. So when we are at 50%, you can utilize limits exactly at 50%, stop loss below the outside bar for a bullish setup. If we're bearish, you can utilize limits at 50%, stop loss above the outside bar. And this is just solely on you being able to trust the entry model from back testing, forward testing, studying, whatever you have to do to be able to see it and use it how you want to use it. No one's going to be able to trade exactly like me, and I cannot make you trade exactly like me. So everybody's going to have their own style, and everybody's going to be able to incorporate this into their own ways. So you can utilize limit orders at 50%. You can also buy stop candles coming out, as we like to call them, 2-2 reversals in the strat, or any type of reversal coming out of these outside bars. As we said, our first target is always the swing high that brought us into our entry, or the swing low that brought us into our entry. And our stop loss is always going to be placed at the low of our outside bar if we're a bullish setup, and at the high of our outside bar if we're a bearish setup. It's very simple stuff, guys. So after you're done here today reviewing this video, you'll be able to hop right into the charts, throw your fib on there or your gam box, look for the entry model, boom, see exactly why it worked, okay? So again, when do I take profit with TT3 entry model? So I'm okay with targeting anything above a 1-to-1 R. Anything above the 1-to-1 is good enough for me to take profit out of the market. I'm not going to be greedy and sit here and hold for bangers every single day, right? I don't need 1-to-50 R every single day. If I can come into the market and take a cool 1-to-1 out the market, get paid, take my money and walk away and go about my day, I am completely fine with that, okay? I'm fine with that. I am never greedy in this market. With this setup, I've seen 1-to-1 every day. I've seen 1-to-5 every day. On occasions, I've seen 1-to-50, 1-to-40, 1-to-30. There's no telling exactly how much profit this entry model can actually yield until you get in, and manage risk. So again, we're always going to target the swing high or low that brought us into our outside bar. So if we're a bullish setup, we're targeting the swing high that brought us into our outside bar. If we're a bearish setup, we're targeting the swing low that brought us into our outside bar. We're also going to look around us, target structural areas, target imbalances, target gaps, target weak highs and lows. So we're simply using this entry model to get in to potentially take out other structural areas. So you just want to find the narrative and price, be on the right side of the order flow, stay on the right side of the market. Not everything is going to be 100%, right? Everybody knows that. Not every entry model is going to be 100%. Not every entry is going to be 100%. Nothing in this market is guaranteed, and that's a fact. Nothing in this market is guaranteed. So make sure you manage greed. Make sure you manage your positions while you're in them. Make sure you're cutting losses when they need to be cut, because not every outside bar is going to work. So let's get into this real quick about refining the outside bar. So this is the biggest part of the outside bar here, is the refinement into these levels. So real quick, I like to use a gam box. It's just very simple, very easy to use. You can use a fib, it'll be the same levels. So I like to use a gam box, and what I use is 0.25, 0.5, 50%, of course is standard, and 0.75. So through my years of working with this model, these are the most precise refinements to enter off of with this outside bar model. So for precision entries, we use 50% as standard, but you will also notice 25% being hit when the market moves quickly, and 75% offering unbelievable RR, okay? If you're entering at only 75%, then you will get only the best of the best risk to reward from this setup. Most times risking less than 5 handles on the NASDAQ when you're entering around 75%. Okay, it's the best possible RR you could ever get out of this model is 75%, but we know that standard is always going to be 50% for reaction levels. So by running the gam box or fib tool from our high to low or low to high, depending if it's a bullish or bearish setup, we get these measurements, and we use these measurements to enter as we come back into our entry model. So again, we have our outside bar. We trade above our outside bar, bodies or wicks, it does not matter. We run our fib around our outside bar. We come back into, let's say, 50% or 75%. Okay, boom, I'm interested. I'm looking for my limit entry in there, and I'm looking to take profit on the way out. It's very, very simple, guys. And as soon as you learn this, you can get right to back testing, forward testing, looking at your charts and seeing the setup exactly play out every single day on any time frame. So it's very simple stuff. And with that, we'll get right into some setups. So we'll start on the 1 minute chart. If you look right here, we have our outside bar, and you'll notice that not every outside bar is going to work. There's a lot of outside bars, especially on the 1 minute chart, and you're going to have to be able to filter these out. I'm able to filter these out very easily just because of the time I put in working with this model. But to help you all, you want to trade outside bars that are near extremes, okay? Try to stay out of the outside bars that are in the middle of everything. You want to stay towards more of the extremes of the range, the extremes of swing points especially. So right here, looking at our first entry, we have our outside bar. We trade above our outside bar. Bunch of price action in between. Tap 25%, we get a move off. We come back into what I love to enter at, 50 and 75%. Okay, as you can see, these are precision to the tick levels here. We trade all the way above our outside bar. Boom, we're activated. We know exactly where we want to take a trade from. We run our fib across the whole outside bar or gam box. We wait for price to come back into 50% or 70%. We're taking limits or we're taking buy stops above these two 1-2 reversals, as we call them in the strat, or double inside bars, whatever you want to say. I'm not going to try to get you all confused. Just how I enter the market. Limits, buy stops, market orders, however you feel comfortable. So here's a nice bullish setup. You'll see this setup every single day on the 1 minute chart. And now if you look right over here to the right, we have a bearish setup. So as you can see, we have this swing point right here, low, high, and we trade all the way down below, leaving this 3-bar completely unmitigated. So what does price do? We make our way all the way back to our outside bar. We're exactly in our POI or outside bar where we want to enter price. So with this model, what does it teach us? Take limits at 50% or 70%. Risk only the high of the outside bar. What do you get? Insane profitability coming out. I mean, instant rejections. Instant. So this is just 2 1 minute setups. You'll be able to find these probably around 10 to 20 times a day on your 1 minute chart. Here we are with some M5 setups, a 5 minute chart. So we'll look at our bearish setup right here on the left side. So what do you have? We have an extreme outside bar, right? Why is an extreme? Because price is coming from this low. We failed to put in any type of new highs. We actually have an outside bar right here that we're tapping into. So this becomes my interest, this outside bar. We're failing to put in any new high up here. We trade below our outside bar. And here's the wick I was talking about. So we have one candle, the outside bar, one more candle with a wick. And that's fine. Like I said, that's fine. But at times it can be less high probability. So we trade below our outside bar. We come back into what? 50% as standard. We're risking only the high of the outside bar. And we're taking profits at the swing low that brought us into our entry. And taking profits as we go as 1-to-1s, 1-to-2s, 1-to-3s, etc. So if you look right here, we have a bullish setup. I think this might have been from a big news day actually. So it looks like what we had here is news created a bullish outside bar, a huge bullish outside bar, right? This is probably a 50 to 100 point outside bar here. So if you look close, we're not activated until this candle comes out. So until this big green candle comes out, we're not activated because we're not trading above our outside bar. So we trade above our outside bar. We come back into 50%, right? As you can see here, this is the 50% of the outside bar. We tap to the tick off the 50% and we can now take entries at 50%, risking the low of the outside bar, taking profits at the swing high that brought us into our outside bar, right? That'd be right here. And we're taking profits as we go, 1-to-1, 1-to-2, 1-to-3, 1-to-5, etc. So it's very simple. It's very repeatable. Anybody can pick this up in the matter of no time, just with a little bit of work, a little bit of studying, back testing, of course, forward testing, adding this to your own style. Anybody can get this in a few minutes, an hour, a day, a week, very quickly. So here we go. We got some more setups on the M15, 15-minute chart. And what do you have? The same exact thing over and over and over. So here we have a bullish outside bar at an extreme, right? So notice how this outside bar is at an extreme in price. It's at a low. And then we take all these highs eventually, right? But this is an extreme. An outside bar is formed. We trade up. We start to fail. We trade back into our outside bar or our point of interest, POI, TT3 entry model. We tap off 0.25% to the tick. And this is when you'll notice the market wants to move very quickly. So we tap into 0.25. We're taking entries with a little more risk because you got to understand, if you're taking entries at 0.25, you're going to have to risk a little more. Whereas you're taking entries at 50 and 75%, it's going to be the best RR possible, okay? So we tap into our 0.25% and then we see price rocketing off, right? Just rocketing. So another thing I wanted to point out real quick, I've made some posts on X about it, but when you have these outside bars, go in your charts and look at how many times you have an outside bar that's traded back into become an outside bar. I mean, it's absolutely mind-blowing. When I saw this, I was like, what? Are you kidding me? Because with the strat, we know how to utilize these outside bars in many ways, okay? We know outside bars are Browning formations in itself. We know outside bars are swing points in itself. We know that exactly why this entry model could fail when it does come back to 50%. Now, I'll get into that later. But what I want you all to see is how many times on any time frame do you see an outside bar that gets tapped back into that becomes another outside bar, right? It's just unbelievable. So those who believe in the algorithm, whatever you believe runs this market, it's pretty crazy to see the footprints it leaves every single day here. So if you look right here, we have a bearish setup. And here again, we have our wick. So we have a massive outside bar. Boom, I'm interested. I love that, okay? Have a massive outside bar. We trade below it. We come back into what, 50%? We can take entries at 50%, risking only the high of our outside bar, right? It's exactly what the model teaches. If you follow the rules, you will have insane profitability, okay? Following my own rules, I'm able to achieve 85 to 90% win rate with this model every single day. Okay, every single day. Just follow your rules, manage risk, take profits, and you can't be stopped, okay? You really cannot be stopped. So you have our outside bar, we trade below it, we tap back into 50%, we take entries at 50%, risking only the high of the 3 bar, and we're coming down to take our first target at what? The swing low that brought us into our outside bar. Very simple, very beautiful. I love it, okay? So here we are on the 1 hour chart. Again, the same exact thing on any time frame, fractal entry model, mechanical entry model. If we have this, we do this, etc. That's it. If we have this, we do this. So if you want to look right here, we have our massive outside bar. What do you notice? Price trades above in one candle coming back down, and I will not count that. I need candles to fully trade above this and then to come back into it, okay? So we trade above this outside bar. We come back into our outside bar. What happens at 50%? We want to take some limits, some entries at 50% because we're very interested in this, okay? So we take limits at 50% and we instantly get what? The move straight back up. Taking out the swing high that brought us into our entry model. So every time, as I said in the beginning of this video, when you're entering in these outside bars, you're always going to be targeting the swing high or swing low that brought us into your entry model. It's always going to be your first target. Or you can simply go with 1-to-1s, 1-to-2s, 1-to-3s, whatever of the outside bar itself. So I'm always risking the low of the outside bar if it's a bullish setup, and I'm always risking the high of the outside bar if it's a bearish setup. So you can always do 1-to-1s just from that alone, and you'll find insane profitability. Get in, get out of the market, take your profits, go about your day, do what else you need to do, right? So, and then right here, we have a bearish hourly setup. So what do we have again? A massive hourly outside bar. We trade all the way below our outside bar. We're waiting for price to come all the way back into our outside bar to give us a discounted entry. And look what happens. We're trading into 50% and we move out. Trade back to 50% and we move out even more, okay? So where's our stop loss? Above the outside bar. Does it ever get touched? No. Does our profit get hit? Yes. All right, and this is the last example I have for you all before you can go and find it in your own charts. This is actually the daily time frame, and yes, it will work on the daily time frame. It'll work on the weekly, it'll work on the monthly, and it will work on the yearly, okay? Every chart, every time frame, you will find this setup, and you can't help but see it after this video. So what do we have? Our bearish outside bar extreme. So we have an outside bar. It trades way below all of this price. We come back to what? 50 to 75%. We're putting our stop loss above the outside bar, and what happens? We trade all the way down into the swing low that brought us into our entry. Exactly what I want you all to target. So you look right here, we have a bullish setup. So we have our outside bar extreme being the lowest outside bar. We trade above our outside bar. We come back here, tapping into 0.25%, 25%. And just what I told you guys in the previous slide, what do we have? An outside bar, tapping into an outside bar, becoming an outside bar. So again, you'll see this every single day, and all you'll be asking yourself is what kind of algorithm is running these markets, right? So again, outside bar, trades above, we come back into what? 50% to 75%. And we're taking our entries out of 75% or 50%, and we're targeting the swing high that brought us into our entry. So you can see how repeatable this model is, how simple it can be, how easy this can be to profit out of this market. And here you are, a massive outside bar coming out of it. As we just said, watch how many times outside bars get tapped back into and become outside bars, all right? So there's not much to this setup, everybody. I mean, you all can get right into it after this video, get right into back testing, forward testing, whatever you need to do. So this is the official TT3 video. I've posted many setups on X. We have a bunch of people learning with us in the Discord. People have been nailing entries for months now with us in the Discord just by learning everything we put out, you know. So you got to put in the work yourself to be able to see it, to be able to see how it works and how to utilize it with your own system, okay? So thanks for checking in, guys. There'll be a lot more coming to the Boom Trading YouTube channel. This is the TT3 official entry model, and I hope that you all are able to take this and take profits out of the market with it. All right.